Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Oil climbing today as the US launches airstrikes in Iran and revokes permission for Iran to sell crude, threatening access for ships to the Strait of Hormuz. Deutsche Bank Private Bank Global CIO Christian Nolting is going to join us to explain why he sees persistent inflation as the top risk, as an Iran-driven energy shock could lift rate expectations. S&P Dow Jones flags Indonesia as at risk of losing emerging market status as stock concerns persist, with liquidity, transparency and free float all under scrutiny. And Prime Minister Modi heads to Australia after sealing missile deals in Indonesia, deepening India's Indo-Pacific defence push as regional tensions sharpen. Defence analyst Raji Rajagopalan joins us later to discuss why India is looking to Australia as an ally, with global powers competing for influence in the Pacific. Our top story today, US forces say they've completed a new round of offensive strikes against Iran. The US military says the operation was in response to Iranian attacks on 3 commercial vessels transiting the Strait of Hormuz. Central Command says US forces hit more than 80 targets in and near the strait, including Iranian air defense systems, command and control networks, coastal radar sites and others. In addition to those strikes, the US has also revoked a waiver allowing new sales of Iranian oil. Now, it remains to be seen how Iran's going to respond. The escalation further strains what was already a fragile truce. Let's get more with our Mideast correspondent, Abir Abu Omar, joining us from Dubai. So, Abir, give us a sense of what happened and where things stand now. Are there still missiles flying, or has things gone quiet?
Good morning, Paul. It's a developing story. I mean, just moments ago, Axios reporting that Iran had actually hit targets in Bahrain, a GCC nation that it has targeted multiple times over the course of the war. But where things are as of now, well, I mean, this has the potential to unravel a situation that is already fragile. We know that the talks between the US and Iran had been suspended over the past few days or so, and this is because of the mass funeral of the late supreme leader in Iran that is set to end on the 9th. So the timing of all of this is quite surprising, especially with Iran or the IRGC hitting ships in the Strait of Hormuz yesterday. What we know is that one of the ships that were hit was a Qatar-linked ship laden with LNG, and essentially Iran has been hitting those ships. And just bear in mind, this is not the first time this happens. Not even during the negotiations over this MOU. We've seen a Singapore-flagged ship being hit in June after the MOU was signed, Paul. And so the reason this is happening is because Iran is saying it will target ships that are not sticking to the routes that it had laid out in the Strait of Hormuz. It just gets to show you that Iran is really trying to assert dominance over the Strait of Hormuz going forward and sticking to its threats about attacking ships that don't kind of fall in line with what it has laid out. And so the U.S. this morning retaliated by, as you have mentioned, targeting more than 80 targets in Iran. Most of those are defense targets, weapon launchers. Iran, for now, is saying through the deputy foreign minister that the retaliation over this attack will be decisive. What we've seen so far is, again, this attack by Iran, according to Axios, on Bahrain. It's a developing story. We're keeping an eye out on what happens in the Strait of Hormuz. An important thing is whether those tankers that have been going through since the MOU was signed will tread with even more caution now, and whether the US and Iran will go into more tit-for-tat kind of attacks. What we know for now is that the talks are still going. An official, a US official, was telling Bloomberg ahead of all of this that the progress on the talks will still happen. We just don't know what the imminent kind of risk is for the time being, Paul.
Yeah, it's easy to forget that this is an MOU, and the events of today have been a reminder of just how fragile things remain. So where are negotiations heading now? Are they still taking place in back channels?
Yeah, that's true. So for the time being, the negotiations are officially suspended because of the mass funeral of the late Supreme Leader in Tehran. President Trump said that he will give Iran this time to mourn. We know that the funeral has been attended by millions of people across Iran. Some delegations from neighboring countries have visited. And then the negotiations were supposed to continue through, as you mentioned, the back channels. The latest round of those unofficial talks happened in Doha between U.S. negotiators, including Jared Kushner, Steve Witkoff, and Qatari mediators. We expect the talks to continue. But then one main important clause in this MOU, Paul, has been the lifting of oil sanctions on Iran. And we understand that the U.S. Treasury has revoked the lifting of those oil sales yesterday. So Iran can no longer sell its oil without sanctions as of today. And so that was an important clause for Iran, one of the main concessions that it had asked for, along with unblocking its frozen assets. And then the nuclear component remains the key clause in all of this, especially for the United States. A couple of days ago, President Trump coming out and saying that his main goal in all of this was disallowing Iran from ever obtaining a nuclear weapon. So it all remains to be seen just how exactly this will arrive, or this will lead to a permanent ceasefire and a permanent agreement between the warring sides.
All right, Bloomberg's Mideast correspondent Sabir Abu Omar there. Thank you. Let's take a look at what it all means for markets. Look, it is a risk-off day, but not violently so. We do have most of the major indexes lower at the moment. A fair bit of selling in Korea again. It's off 1.6%, although SK Hynix is up 3.6%. Samsung a little bit weaker, off 1%. But the Brent crude price, that's another interesting one. Yes, it's higher, but we're at nowhere near the nosebleed levels we saw at the peak of the conflict. 76.11 for a barrel at the moment. New York crude 72.30. And if we take a look at around some of the other assets, gold catching a bid right now, and New Zealand's NZX 50 weaker by 0.7%. I mentioned that because the RBNZ did, of course, lift the cash rate 25 basis points to 2.5% to guard against inflation risks. To be fair, they were probably going to do that before the events of this morning in the Persian Gulf, but the decision to do so does reinforce perhaps the wisdom of that move. Joining us now is Christian Nolting, Global CIO at Deutsche Bank Private Bank. Christian, thanks so much for joining us. In terms of the market reaction to this, how are you interpreting it? Is it complacency, or is it just this is what the new normal is now?
Yeah, I would say I wouldn't call it a new normal, but I think as long as we don't have final agreements between the US and Iran, we will see volatility in oil prices and some flare-ups. And I thought, honestly, when we saw oil prices, and here talk about Brent, being back close to 70, which it was at the beginning of March when everything started, that's probably a bit too low, because as long as negotiations are taking place, we have issues with ships in the Strait of Hormuz. I think there should be a risk premium to the oil price, so I'm not surprised that it's moving higher. And it seems, as you rightly said, markets are also not too surprised about it. If I see the reaction on markets, it's not that negative.
Now, I know that inflation is something that's at the top of your list of things to be watching right now, and we already had the RBNZ moving today, even before the events of this morning. We were anticipating that. So as the oil price sort of maybe remains under a little bit of upward pressure, where do you think inflation's heading? What sort of response do you anticipate from developed central banks?
Yeah, I think what we have been seeing since the peak in oil prices, we've seen lower oil prices even with the increase today. And even if it goes a bit higher, I think it's far below the peaks we have been seeing through the last 3 months. From that perspective, I would not be surprised if we do see inflation globally coming down a little bit, which I think is good news for markets. In a way, it's also good news for central banks, because that puts a little bit of pressure off them to potentially hike further from here. I think the Fed has been a bit cautious, has not hiked obviously yet, but we see that there is some pressure to hike, maybe if that inflation number goes higher. ECB has hiked already, and we need to see whether there's a second hike or not. But I think on the inflation picture, longer term, we would see going into 27, if there's no further escalation in the Middle East, we would see inflation coming back to levels where central banks don't need further pressure or don't have further pressure to hike, which I think is good for the economy.
We have seen yields rising, however. We just take a look at the US 10-year. It's up about 9 basis points in the past 24 hours or so. How sustained do you see that sort of a move? Longer term, can you see yields coming down?
We do see yields coming down and on the 10-year slightly, but not much, because our topic remains it's higher for longer. And it's not only inflation. I think it's also debt spending, deficit spending, which not only in the US, but I think around the world is further increasing. So from that perspective, we are in the camp of higher for longer. And what you see and what you just mentioned, the 450 area in the US has always been an area where markets got a bit, I wouldn't say nervous, but let's say cautious. And we have seen some implications as a lot of tech companies are now going to the bond market. Just look at the last days. They are more interest rate sensitive, and I think it's not in the interest also of the US to offer all this refinancing that yields would be too high. So we don't expect yields to move substantially higher from here, but we think they're rather staying sideways, maybe coming down slightly with lower energy prices, but not substantially. So the longer end, from our point of view, will stay elevated. Higher for longer, I think, remains an important topic.
Would you be willing to make a forecast for the oil price in the second half, given the number of variables involved here? And if it weren't for this war, we'd probably still be an oversupply.
Yeah, and we have seen some more supply coming to the market. Still, I would say this conflict, from my point of view, is not over so far. There was a 60-day period that could be prolonged, actually. So if you ask for a forecast, I wouldn't be surprised, and here talk about Brent, if we see around 80, maybe 82 towards the end of the year. I think that's certainly possible. That, by the way, would still be much lower than we have seen in the peak, and in a way would be positive for inflation. But still, I would not expect this to come down to levels, as I said, we have been seeing beginning of March before the conflict started.
And how about the gold price as well? Because that's catching a bid today. We're just above 4,100 an ounce. What's your outlook for gold for the rest of 2026?
Yeah, I think we are still positive on gold. I think the trend for gold is intact because, yes, we have seen some setback in gold. We think it's rather a buying opportunity because you have more fiscal spending. I think central banks will continue to buy into gold. And from that perspective, we are rather positive and think everything which was below 4,000 is rather a buying opportunity because the longer-term trend for gold from our point of view is intact. We have seen gold above 5,000 already. I think it was a bit too fast, too much, has come down. But as we say, that area, that trend should be intact. And from that perspective, we remain positive and are rather a buyer of gold at these levels.
Well, we obviously have a very uncertain geopolitical backdrop at the moment, but amid that, I understand you like financials and industrials. Can you tell us if that's a purely defensive hideout, or do you think there's a real growth narrative here to be heard that we're missing around and away from the tech story?
Yeah, I think what we do in the portfolios is we still like tech. We still like, and don't get me wrong, we are not in the camp that AI is in a bubble territory. I think there's some losers and some winners, which I think is healthy for the market. So we are focusing more on hardware, on the AI supply chain at this point in time. But we have taken some gains on tech, and we think where could markets rotate into. So market breadth at this point in time is very, very narrow. And if we see some rotation, it could be into some cyclicals, into some financials. Look at the reaction function, for example, of some European financials. The last 2 days, they were strongly up. I think that could be a rotation trade we are seeing, and that's what we are already doing in the portfolio. And honestly, I think, Paul, if we get a bit more market breadth, I think it's healthy for the market. Otherwise, if it's only going into AI globally, then we enter, let's say, a heightened territory where there's risk of a larger setback. So I think it would be healthy, and we are trying to preempt this in the portfolios as well.
All right, well, Christian is sticking around. Christian Nolting of Deutsche Bank Private. We'll be talking to you a little bit more about your thoughts on AI and tech, and still to come on Insight. Some of those easy gains that we've seen from Asia's AI trade might be fading. Investors are becoming more discerning, rotating out of crowded chip trades and into new opportunities across the region. We'll have details next. This is Bloomberg. Welcome back. You're watching Insight. Asia's AI trade is entering a new phase with investors becoming more discerning. They're rotating into cheaper sectors and looking beyond traditional AI winners in a search for new opportunities across the region. Bloomberg Managing Editor for Asia Equities, Nolting joins us now with more. So, Nolting, for the past 2 years, buying Asian AI winners was a pretty straightforward trade. Why are investors getting a bit more selective now?
Hey, Paul. Yeah, the main reason is that valuations and expectations have become much higher. Many of Asia's biggest beneficiaries, including those in South Korea and Taiwan, have already delivered extraordinary returns in the past year or two. That means investors are no longer rewarding companies simply because they are exposed to AI. They want evidence that earnings growth can keep exceeding expectations. And now we are seeing that in Samsung's recent results, where even a huge profit increase wasn't enough to prevent a sell-off. So as your guest was saying earlier, the AI theme remains intact, it seems, but the market is moving into a new phase where positioning, valuation, and execution now matter much more than before.
Okay, so if investors are trimming some AI exposure, where's the rest of the money going instead?
Yeah, it's largely a rotation that's going on right now rather than a retreat from risk. So some investors are looking for cheaper ways to play AI through markets like Hong Kong, where Chinese internet giants offer AI exposure at a much lower valuation than many semiconductor names. Tencent, for example, is up more than 10% this month after its valuation hit a record low a few weeks ago. And today you're seeing Hong Kong stocks are doing really well because valuations there are quite depressed. And some other investors are moving into markets such as Malaysia, which is also benefiting from its role in the AI supply chain, but it hasn't seen the same degree of multiple expansion. There's also growing interest in non-AI sectors too. For example, markets like India now is getting another look from Wall Street brokers because the earnings momentum there is improving and volatility has been much lower. So rather than abandoning the AI story, investors are broadening their opportunity set right now and looking for areas where expectations are less demanding.
All right, Bloomberg's Managing Editor for Asia Equities, Nolting there. Well, Christian Nolting of Deutsche Bank still back with us. And Christian, I just want to pick up on what Nolting was talking about there. We've seen a rotation in the US out of tech, prevented some wider losses today, perhaps. You mentioned you like financials and industrials. Is this rotation something that you're actively looking at the moment? How does it form a part of your strategy?
Yeah, so we do. And honestly, as I said before, I think it's very healthy for the markets. So we are not rotating inside the AI trade, but still keeping the AI trade, but taking some of the substantial gains we had, fortunately. And then move this into, as I said, financials, for example. But another sector we like as well, we didn't talk about, is that, and that has some relation to AI, is electricity. I think there's so much demand for electricity. So looking into utility companies and all the value chain, all the production chain on electricity, I think makes a lot of sense. And the good news is if you have utilities, if you look from a diversification aspect in the portfolios, utilities tend to be a bit, I wouldn't say boring, maybe I say boring, but from that perspective, it gives you good diversification in terms of volatility in the market. And I think that's very important, to look not to only at the huge gains in AI, but also to think of a market broadening and then to say, what can I do in the portfolio to diversify a little bit, to be a bit more secure if there are some setbacks.
Yeah, to your point on utilities and electricity, are we at the stage yet where it's electricity consumption and supply that maybe is shaping up to be the real cap of AI growth rather than semiconductor supply?
Yeah, it's true. I agree with that. So, but I think the longer-term story isn't over yet. There will be more investments from that perspective. So we do also expect prices for electricity to go up globally. I think it's also a good hedge in a way to invest into this. So I think that trend has started and probably will not end so far, because I think we are just at the start of, let's say, the second phase of AI. So we are moving more into the agentic AI. Some people are using it, but it's still early stages. And I think with that, more and more people using it, there will be more demand directly coming also from the electricity side.
Yeah, it's hard to argue against the broad narrative, but within the AI story, are there any stocks or sectors that are looking a bit stretched or overbought?
Yeah, look, I'm a bit cautious, and I think that's not new to the market. If you look software as a service, I think that was quite stretched. It has come down in performance. But in comparison to others, when you say they're cheap valuation, I'm still cautious. I don't expect that to come back very, very quickly because there's a lot of replacement happening. And especially now, if you go into agentic, I think that topic will continue to weigh a little bit on that sector. So there, I think we are not switching back onto because I think there's more to come on that side. So a bit more cautious there.
For some of these big tech names that have been driving this whole story, what are you looking for in the next set of earnings announcements, both in terms of revenue and also how the market reacts to it? Because, we had Samsung yesterday with a very solid set of numbers and everybody's still headed for the exits.
Yeah, indeed. I think that's quite interesting. We are, again, looking, I think, at a very nice quarter. If you look at Q2 earnings now coming up for the U.S. expectations, 24%, which is slightly lower than for the previous quarter. But still, I mean, that's a very, very impressive number. For Europe, just to also give you the numbers, 14%. That's even higher than the last number, although the absolute number is lower. I think that's positive news for the market if that's confirmed. What we are seeing, though, also in the last quarters, if there's good numbers coming in, sometimes the market is selling the facts, but it has recovered. And I think as long as earnings coming in that strong, we remain positive for the market. I know it's not the leading indicator, but from a valuation perspective, I think that's very positive for the market. So if we do see some broadening together with a decent earnings season, I think that's a positive argument for the market also for the second half.
When you see something like what we saw yesterday with Samsung, a solid result followed by some profit taking, what do? Do you take profits as well, or do you view that as a buying opportunity?
Yeah, we don't look at all single stocks. We really look at sectors and the weighting there in the portfolio, and then we especially look how are the sectors working together. So if we would be so dependent on a single stock, I think that would be a bit dangerous for the whole portfolio. So we buy or sell the sectors. So we have taken some profit already in May on this, and we are fine with that. So from that perspective, we rather think if that would continue, we would come back to the sector and add to this. We have not done this at this point in time. So it's not day trading of the securities, which I think doesn't make so much sense. But the trend needs to be intact. And I think for AI in that area, the trend is intact. So we'd rather buy into this if we see some further setbacks.
You mentioned a minute ago you like some of these AI adjacent stories, such as energy providers, utilities, etc. How about base metals like copper? Is that something you're looking at too?
Yeah, but on the commodity side, of course, we need to look what's in contango, what's in backwardation before we buy into that outright. I'd rather look at those companies who profit from higher copper prices, for example. But on the metals, for diversification in the portfolio, what we do is really to look at gold, not so much at copper, but also silver. We are a bit more cautious because it's more tilted to the economy. So on the commodity side, it's more looking at gold for diversification aspects, which has worked very well, I have to say. And then for the other base metals, we rather look at those companies who profit from trends there. So that's an approach we like from a portfolio perspective.
All right, Christian Nolting of Deutsche Bank Private Bank, thank you so much for your time today. Still to come, Indonesian stocks are back in the spotlight. S&P Dow Jones now joining MSCI and flagging a potential downgrade to frontier market status. We'll take a closer look at that story next. This is Bloomberg. Welcome back. You're watching Insights. Indonesia's efforts to reassure global investors have suffered a new setback. S&P Dow Jones says it may downgrade the country's emerging market status if concerns over its stock market persist. MSCI back in January also raised concerns about Indonesian stocks' investability, flagging a potential downgrade to frontier market status. For more, let's get to our chief Asia FX and rates correspondent, Ruth Carson. So, Ruth, how are our investors reacting to this news?
Yeah, absolutely. It is just another setback here for markets in, Southeast Asia's largest economy. Now, investors are taking this in stride. They're passing through all the information that is out there right now. And it is important to remember that a downgrade isn't imminent. This is part of the annual review. But, and this is the key but here, it is another factor that will be weighing on foreign investors' minds. Do you actually want to invest in Indonesian stocks, or Indonesian assets in general right now, when there is yet another review and yet another threat, potential risk of a downgrade to Indonesia's status?
As we mentioned, this comes on the heels of MSCI's review as well. Of course, sovereign credit rating outlooks from Fitch to Moody's have turned negative for Indonesia also. So what does all this mean? What does it mean for capital flows?
Yeah, I think a good way to look at it is also beyond stocks to look at the macro picture. So remember that Bank Indonesia has raised rates by a full percentage point this year, 100 basis points. And yet, if you look at the currency, it is one of the worst performing emerging market currencies in the world against the dollar. Now, that is testimony to the pressure that Indonesia is facing right now on all fronts. We know that the Jakarta Stock Index, the Indonesian stocks are the world's worst performing already, and you've got pressure on the rupiah. We know that there's also outflows on the bond side. So all of this just points to a very bearish positioning by global investors on the Indonesian front.
Yeah, tell us a little bit more about the rupiah, because investors sort of view that as a release valve for all these pressures Indonesia is facing. But well, the currency is pretty rotten at the moment, just below 18,000. Where's it heading from here?
Absolutely. So if you look at the statistics, it does not stack up well for the rupiah, down more than 7% against the dollar this year. And as you pointed out, Paul, flirting at the 18,000 per dollar mark, it has hit a record low as well. Now remember, the rupiah, like all currencies out there in the world, they are often the first thing. Currencies are often the first thing that investors sell in a time of crisis. It is the most liquid part of markets everywhere. So definitely the rupiah has borne a big blow when it comes to investor angst here. And yes, we will likely see pressure continue, especially if, some of these downgrades do come into effect, and if that actually happens. So definitely watch the rupiah. It will be sort of an indicator of investor interest and appetite for a country's assets.
All right, Bloomberg Chief Asia FX and Rates Correspondent Ruth Carson there. Let's stay with markets. Shares of Chinese autonomous driving firm Momenta rising in Hong Kong after the company raised $752 million in an IPO. Its trading debut has seen testing the market appetite for loss-making tech firms. Our Chief North Asia Correspondent Stephen Engel joins us now from Hong Kong. So, Stephen, maybe they make a loss, but how was demand despite that? And what's Momenta going to use this money for?
Yeah, well, demand has been picking up, and that 82% rise in revenue is a good indication of that in 2025. Yes, they're still loss-making. They lost about $500 million US last year. But in this interview with the founder, chairman, and CEO, Mr. Cao Xudong, he told me that that loss is narrowing, and he's going to hit profitability by 2028 and break even by next year. What they have to do, though, is they have to broaden their client base, because their top 5 clients basically equate to about 2/3 of that revenue that they've gained. So they need to broaden that out, and by broadening that out means they need to spend more on AI compute. So about 40% of the proceeds of this listing in Hong Kong today is going to go, according to Mr. Cao, to AI compute. He actually sort of said to me on the aside, he said probably even more than 40%. Here's my conversation with Cao Xudong.
We believe autonomous driving is the first and also currently the biggest application of the physical AI, because a huge amount of data and also good closed loop of the business. So we have enough funding for the R&D investment, not only from the capital market, but also from the gross margin of our revenue. So by a large amount of data and a large amount of R&D investment, we can scale our model. The model is the world model and the foundation model for autonomous driving, not only for one scenario, but also for all kind of autonomous driving scenario, including passenger vehicle, robo-van, robo-truck, and robo-taxi, all robo applications.
How do you make sure to offset the rising cost of chips and also data storage? Yes, your revenue was up 82% in 2025. You're still not profitable, though. A loss of a little bit more than 500 million US dollars. How do you offset with those licensing of software and your autonomous driving software solutions? How does that offset the rising cost of chips and data center if you're going to become more of an AI company?
Yeah, it's a good question. Our revenue in the past, every year the CAGR is more than 80%, and we have the confidence in the future. The CAGR also more than 80%, and the gross margin will be more than 70%. So by more and more revenue and gross margin, we can continuously to increase our R&D investment. However, we can keep narrowing our loss. Compared to last year, this year our loss will keep narrowing, and next year break even, and 2028 we will be profitable.
Okay, so there you go. There's news. Break even next year. In 2028, you're going to see profitability, right?
Yeah, profitability.
Okay, so where do you go from here as far as expansion overseas? You have a number of different legacy car makers. Your partners and one of your clients is Toyota, also Mercedes. GM is one of your backers. But right now, about, I think, 2/3 or so of your revenue comes from 5 main clients. How do you broaden that out?
Oh, it's a good question. 2 approaches. First approach is, of course, domestic OEM. Now their overseas progress is also very good. They want to enhance the product competitivity by autonomous driving. So together with the domestic OEM, go to overseas markets. That's one approach. Another approach, we already collaborated with Mercedes, BMW, Audi, Toyota, Honda. We have a very good collaboration and a very good technology and product in China market. They also want to reuse the success in China to overseas market. So 2 approaches to further expand our global market.
Now, obviously, they want to go abroad. It's a big theme for Chinese companies, go abroad, because right now they dominate in China for the externally made smart driving solutions. So about 65% of the externally contracted smart driving solution software licensing comes from Momenta into BYD and others. Many car makers are also trying to do it on their own. But keep in mind as well, Tesla is trying to break into the China market with full self-driving, and also Huawei, the big technology giant, has a number of different autonomous driving and ADAS solutions for the automobile sector through its Harmony OS system. So there's lots of competition. So again, getting this round of funding done today and then essentially narrowing the losses and turning to profitability by 2028 is going to be important to stay on top in the China market, but also to go abroad.
All right, Bloomberg's chief North Asia correspondent, Stephen Engel, thank you. Still to come, as India's Prime Minister heads for Australia, defence analyst Raji Rajagopalan will tell us why security cooperation remains at the core of the bilateral relationship. That conversation coming up next. This is Bloomberg. Welcome back. You're watching Insight. We're just a few minutes away, about 3 minutes away from the Indian Open. Let's take a look at Indian markets in the pre-market. It looks like we're setting up for a slightly softer session, completely unsurprising considering the events earlier today in the Middle East with tensions flaring up again, missiles flying, Iran retaliating. But on the upside, 3 out of every 5 members of the broader Nifty 500 index now trading above their 200-day moving average. That's the highest proportion we've seen since November. So signs of that rally steadily regaining a little bit of ground, notwithstanding the modest drop that we're expecting to see today. The rupee a little bit stronger as well. Meanwhile, that US decision to revoke permission for Iran to sell its oil globally might be a setback for Indian refiners, Bloomberg's been told that state-owned refiners were preparing to buy Iranian oil if the US extended its waivers or eased restrictions. Now, sources, though, say that the companies have little room to buy Iranian crude immediately, having fully contracted shipments required through August. Now, India has taken a major step towards closer defence cooperation with Indonesia by signing deals on missile systems as Prime Minister Modi met with Indonesia's President Prabowo in Jakarta.
Today, we agreed to enhance cooperation in defence exchange, disaster management and industrial collaboration. Now, our coast guards will work together in the Indian Ocean for maritime safety and security.
As cross-border security challenges continue to grow, we are committed to deepening cooperation in capacity building, emerging technologies, combating transnational crime, and developing digital infrastructure.
For more, let's get to our South Asia economy editor, Ruchi Bhatia. So, Ruchi, today is Narendra Modi's final day in Indonesia. Can you talk to us about the key highlights of that joint statement?
Well, yes, you heard the two leaders there. Defense deals, clearly a mainstay for Prime Minister Narendra Modi's visit to Indonesia. In fact, we also, while the details of this is very sketchy, the defense deals, what we do know so far is that the BrahMos missile as well as the Astra air-to-air missiles will be procured by Indonesia from India, which really makes Indonesia the third country that India has been able to sell the BrahMos missiles to. So this is really a feather in the cap, so to say, for India. The two nations also, signed a pact to develop the Sabang port. Now, this will be jointly developed by India, and this is very close to the southernmost tip of the Great Nicobar Islands here. And remember, these ties that are talking about boosting maritime security, boosting defense, is coming in the backdrop of a less reliable U.S. and a growing influence of China in the region. Having said that, the two leaders talked about sharing a close relationship. There were a lot of handshakes and a bear hug involved too, with Indonesia bestowing Prime Minister Modi with the highest civilian award as well. That takes the tally for Prime Minister Narendra Modi, who is one of India's longest serving prime ministers, to 35, and even outdoing US President Donald Trump as far as these foreign awards as well. While that, of course, is has courted a lot of controversy in India, with Prime Minister Narendra Modi getting awards from Seychelles, Israel, and of course also Indonesia in the recent few months in India. But all in all, this trip was all about forging greater ties with one more Southeast Asian country, and we did see a lot of defense deals there. That was, of course, the mainstay, so to say.
All right, well, next stop for Narendra Modi is Australia and New Zealand. What's expected here?
This is also going to be an important one because later tonight, Prime Minister Narendra Modi will be headed to Australia and thereafter to New Zealand. The Australian visit comes as India is looking to, bolster ties with a country like Australia to get critical minerals and also bolster strategic supply chains. A uranium supply pact is what we do know is pretty much on the cards. They're also talking about deepening security ties, also ensuring that the Indo-Pacific is a more secure and a stable place, so to say. As far as the New Zealand visit is concerned, that one is also going to be important because there's a crackdown on Indian immigrants. So it needs to be seen the kind of message that the Prime Minister will give to the Indian diaspora there, and also, of course, greater trade and security ties that he will be talking about forging with these two countries as well.
All right, Ruchi Bhatia, our South Asia economy editor. Thank you. Well, joining us now is Raji Rajagopalan, resident senior fellow at the Australian Strategic Policy Institute. Raji, thanks so much for your time today. I just want to pick up on what Narendra Modi is going to be doing here in Australia. There'll be a focus on critical minerals, supply chain resilience as well. What sort of announcements are you looking out for that would qualify this visit as a success?
Yeah, critical minerals is absolutely important because this is something that India recognized. India, along with other countries, recognize the vulnerabilities of having to depend on one single nation in 2020 when the COVID-19 pandemic hit us. So since then, there have been MOUs signed. 2023, India and Australia signed a partnership agreement to for India to kind of get sort of 5 target projects in a sense, including 2 lithium ones and 3 cobalt projects, and that has been pushed forward, undertaking due diligence, and so it's on that process at this moment. But I think that's something that India is very keen to look at, and I believe Australia has reserves of at least 21 of the 49 critical minerals that India identified as essential, both for its energy transition, but also for advanced manufacturing and so on and so forth, whether it is in terms of lithium, cobalt, rare earth, nickel, so on and so forth. So there's a lot that's kind of happening in that space. But to me, what is today driving the relationship, the partnership, is the defense and security ties that has come to be the centerpiece of the Australia-India defense partnership.
Yeah, well, earlier today also we got a reminder of just how fragile the situation in the Middle East remains. And of course, India heavily dependent on that region for its energy needs. Do you think that India could be looking for some sorts of agreements and arrangements around energy security just in case these conflicts flare up again? Because of course, Australia does have abundant supplies of LNG.
Yes, that's been in the pipeline again. The LNG it has been on the agenda. How quickly we get around to doing that, but any sort of disruption in the flow of oil and gas from the Persian Gulf, from the Middle East, actually could have multiple effects. One, of course, the shortage of oil, and second, the spiral of the prices of the oil. That's going to be quite impactful in a sense. So higher pure fuel prices and higher transportation manufacturing costs, then of course the insurance cost and kind of thing. So there are going to be multiple effects of any sort of disruption that comes from the Middle Eastern disturbance in a sense. So Australia and India could be looking to concretize some clear pathways in the days ahead in terms in case the conflict were to continue for a longer time.
And what sort of opportunities and synergies are there around the nuclear fuel cycle as well? Because, as I mentioned, India has a voracious appetite for energy. Australia has uranium, and also Australia has an eye to the eventual arrival of AUKUS nuclear submarines. So what sort of opportunities are there for cooperation here?
So on the uranium side, I think there has already been, India had signed a political agreement with Australia after the NSG waiver, the Nuclear Suppliers Group waiver in 2008. So this was Australia became one of the early countries for India to conclude that agreement. But during the visit of Prime Minister Modi, what is being looked at is to have a commercial agreement for the sale of uranium, because this has been a thorny issue in the bilateral relationship for a very long time. So to get something actually moving and to make it into a commercial deal at this point of time is the plan for both sides. I think there have been discussions, negotiations on for quite some time to reach this particular stage in the relationship on this.
Well, I believe it's been since about 2014, India's had like a look east policy. But this visit, going to Indonesia, Australia again, New Zealand, first visit by an Indian Prime Minister for almost 40 years. These visits, what does it tell us about the relationship, comparatively speaking, with China or with the US?
Yeah, absolutely. No, there is. The U.S. Has been a bit of has posed itself as an unreliable. Somewhat, there are lots of uncertainties. Let me put it that way. There is a lot of uncertainty in terms of the U.S. has not pulled out of the Indo-Pacific, but at the same time, can all the major powers as well as smaller neighbors in the Indo-Pacific really count on the U.S. to provide that kind of certainty, that kind of stability? I think there are question marks around that over the past year and a half. And therefore, countries in the region are trying to come up with their own partnerships. But I would not say the US can be just gotten rid of, because I don't think that you have. So even if you put 3 or 4 major economies in the Indo-Pacific region, you can take India, Australia, Japan, South Korea. Even if you were to kind of put together all these 4 countries, their economies, they still don't match up to China. They are still something like half or less than half of China's economy. And a strong economy is absolutely critical if these countries have to build up their defense capabilities and stand up to China, and stand up to China's aggression in a sense, not, and ensure that the region in which we live, the Indo-Pacific region, is free, open, and stable in a sense, and prosperous. And today, Australia and India have that shared outlook, which has put, therefore, the defense cooperation as the biggest driver of this particular relationship. And this is now spans across multiple domains, whether it is in terms of naval, air-to-air cooperation, air force-to-air force cooperation, the land armies, and so on and so forth, and submarine rescue operation. Last year, for instance, when Defense Minister was in Canberra, the two countries signed air-to-air refueling. In 2024, they signed the agreement, but there was further stepping up of that particular relationship in a sense. Because all of these countries are looking to the major powers in the region, including Australia and India, are looking to see how they can build up each other's capability, so that they have more options to operate together in the Indian Ocean and the wider Indo-Pacific, but also have their own individual capabilities being developed, so that they are able to be effective in countering some of China's aggressions and so on and so forth.
Raji, just briefly, we've only got about a minute left, but one of the feature of these sorts of visits from Narendra Modi are these huge stadium events where, he greets the Indian diaspora, where there is one. There's a big one happening in Melbourne tomorrow. There's one in New Zealand as well. What's the optics here? How does this benefit him politically? Just quickly.
In fact, I'm going to be heading to the Melbourne cricket grounds for that one of those lunch that's being hosted by Prime Minister Albanese for Modi. Yeah, you have these big splash events characterizing but one is to reach out to the diaspora, and I think the hope is that it also some of these kind of big events also translate to big time some major investments into the country. India is still seeking solid investments from around the world. So that's a critical point of these meetings in a sense.
All right, Raji Rajagopalan, Resident Senior Fellow at Australian Strategic Policy Institute. Thanks so much for your time. Before we go, here is a quick look at tomorrow's show. Julia Wang of Nomura International Wealth Management will join us to discuss her market outlook. And internationally renowned political strategist Linton Crosby joins us for a very rare interview. Don't miss that. This is Bloomberg.